Welcome, dear traders. You are watching a recap of the Asian session on July 24. Asian stock indexes kicked off a new week with gains. The Nikkei jumped by 1.5% amid strong earnings reports from large car makers. The last week of July is going to be the busiest in the earnings season. Investors are also anticipating the rate decisions of the three largest central banks. It means that risk appetite is likely to be low, at least until the Fed meeting and Jerome Powell's speech. The regulator is expected to raise the key rate by 25 basis points. Should the Fed state that it will make further decisions based on incoming data, investors will interpret it as a dovish rhetoric. As inflation remains persistently high, analysts doubt a policy reversal this year, and today market volatility may increase amid fresh data. The European Union and the United Kingdom will unveil their PMI indexes. Japan has already published its manufacturing PMI data, and the indicator fell to 49.4%, the lowest reading since March. It was also the 6 months of a contraction in the manufacturing sector this year. The report showed a decline in new orders, output, and exports. Employment growth eased as well. Inflation tumbled to the lowest level since February 2021. However, all these factors are unlikely to affect the Bank of Japan's rate decision. The meeting is scheduled for Friday, July 28, and the Japanese government has already confirmed this scenario. The authorities cited the accord that ties the Bank of Japan to return consumer prices to 2%. Against the backdrop of weak macro stats and ultra-loose monetary policy, the yen dropped considerably last week. It boosted demand for Japanese stocks among foreign investors, and the yen extended losses after the publication of a forecast by Reuters. The agency believes that the Bank of Japan will maintain its dovish stance and yield control policy at the July meeting. As a result, the rate gap between the Bank of Japan and other regulators will widen even more. It could lead to a further weakening of the yen versus its main rivals, especially the US dollar, although the dollar-yen pair is still moving in the red zone of 141.20 and 141.80. On early Monday, technical indicators signal its further growth. This is why it's better to go long near the resistance zone of 141.90 and 142. In Asian trading, the pair was trading at 141.50, with the yen maintaining a bullish bias. The US dollar climbed significantly last week. It also showed a meteoric rise at the start of a new week, and such a sharp increase occurred amid a fall in the euro. The euro depreciated after the release of a PMI reports for Germany and the Eurozone, and the data disappointed investors and triggered the sell-off of the euro. The US dollar index entered the upward range of 180 and 101.40. After decline to its 15-month lows 10 days ago, the US dollar managed to recover to 101.30. It seems to have started a steady rally amid hopes for another rate increase. China is still unable to get the economy back on track. After several years of restrictions, the economy is recovering rather sluggishly. The property sector crisis has also caused a new wave of a sell-off of Chinese assets. Therefore, the country's authorities are taking extra measures to help companies prevent further losses. In the morning, the National Development and Reform Commission announced new stimulus measures for private businesses and investments in some sectors of the economy. However, these are just words, as no actions have followed yet. Traders hope to hear more details later, and thus those statements failed to improve market sentiment in Asian markets. For the Australian dollar, which often serves as a liquid proxy for the Chinese currency, the falling yuan as well as a weak demand in the Chinese market are certainly bearish factor. Nevertheless, the Aussie appreciated to 0.6750 in the Asian session. Its rise was driven by growing oil prices as well as a moderate risk sentiment in the stock markets. As a result, on Monday, the Aussie was moving in the green range of 0.6715 and 0.6745. However, compared to last week, the growth of the Australian dollar was weaker. The main reason for this is the rally of the US dollar in anticipation of the Fed's decision on Wednesday, July 26. The New Zealand dollar also added gains. The Reserve Bank of New Zealand will hold its meeting on August 18. Given the stubbornly high inflation, there is a likelihood of a rate hike by the regulator, so the kiwi was a high upside potential. It also ended the Asian session, trading at the upper border of the 0.6156 and 0.6206 price range. And that's all for now. Hit the subscribe button and stay up to date with the latest market news with us. See you soon.